Very good morning to all our listeners. Hope you had a great evening. A quick look then at what we've seen so far here in Europe ahead of the US entrance. And it's been general risk-on sentiment observed across the asset classes. Higher equity markets, predominantly led by financials, has seen the IBEX slightly outperform. And we've seen a decent drop in the 10-year yield in Spain. A lot of this coming on the press articles in which we saw late yesterday in the US and the likes of the FT. The El Economista and El País in Spain also reporting this morning about further ideas of recapitalising the Spanish banks, with Germany said to be warming to that idea, as well as other European officials. As such then, we have seen Bund futures trade predominantly lower. Volumes have been slightly impeded, but not a whole lot, due to the Corpus Christi holiday. It's not a market holiday, but a number of the larger German regions will be observing that public holiday today, so something to keep in mind. We also have had the Bund, Bobl and Schatz June futures expiries today to add to some volatility. In terms of the actual bond auctions though, they were a focus point for this morning, but managed to go through without any real issues. Actually, the bids of covers on the Spanish auctions were pretty solid overall, and they sold at the top end of their indicative ranges. And then a four-line tap out of the French Tresor went through smoothly and has seen a bit of a bounce back for any losses that were seen in the earlier part of the session for the euro currency. One of the big market movers though was a high anticipation for the release of the services PMI, which came out of the UK this morning. Given the particular weakness, the weakest since May of 2009 in the manufacturing reading in the PMIs we saw at the end of last week, there was a lot of emphasis on today's figure, given the fact that we have the Bank of England's interest rate decision forthcoming, and the potential for further QE was said to be highly dependent on this number. The number came out, and in fact it came in stronger than the street was looking for, and as such then any optimism about further QE today from the Bank of England looks to have been taken off the table somewhat, as we've seen gilts come under some significant selling pressure after that service PMI number, and the sterling currency in terms of cable has made a decent move back up to the unchanged mark on the session, or minor positive now, so reversing earlier losses and back above that 155 level. Looking forward then in terms of the rest of the session, we have the weekly jobs data for the US, but one of the key things we'll be watching will be Benjamin Bernanke, the Fed chairman, who is testifying on the economic outlook of the US. It comes at a very critical time, given a lot of the expectation, the potential for further easing from the Fed, particularly given some of the dovish comments we heard from Yellen overnight. That concludes the opening wrap for me here in London, so for the moment I wish you all a great trading day.